It takes guts to actually veer out of AI stocks. If you're an investor and you want to put capital to work, long-term investor, short-term investor, it's really hard to go against the grain. We know that people like to follow the herd, but following the herd has been a pretty decent strategy. Just buy the Mag 7 stocks, buy the big tech stocks, AI related. It's been working and they've been hitting highs in the Nasdaq and the S&P yesterday. Today's Thursday, but they're at or near record highs, the major averages. Dow is a little bit of a lag, but it's not down too much from its all-time high. By the way, you can't invest directly into an index, but you could invest into a security that tracks or mimics an index. So I spend a lot of time managing assets. I spend a lot of time doing a lot of things, financial planning for clients, speaking with clients, making sure they're ready for what comes next in their life, and just being two or three steps ahead of that. We know about all kinds of things from dental insurance to health insurance to Medicare to claiming Social Security. These are all of the things that come up in a day, and they're quite mundane, but these are actually the important things. And I venture to say that these will play a bigger part in your financial life than worrying about which AI stock to chase next. And this is why I always say you don't have to run and buy the shiny new toy, whatever company comes out with the next hot model or the next hot chip. You don't actually have to run out and buy all these, run into each one of them every time, and you can stick with the ones that are doing well. Okay, so it's pretty nuanced, but I'm searching for stocks that are non AI themed. We've been talking about industrials like Caterpillar and Eaton Corp and how they are going up, even though they're industrial stocks, they're not AI stocks. They are tethered to the AI theme because they're building out the data centers. We can talk about the chip stocks, the NVIDIAs of the world, the Marvells of the world, the Taiwan semiconductors of the world. You know who these are, the Broadcoms. We talk about these all the time, AMD. It's obvious that they're part of the AI cohort. Less obvious so are some of the industrials that are actually building out the big AI data centers. These are not the kind of data centers that we saw 5 and 10 years ago and 15 years ago when companies were moving their information, their data to the cloud. These new data centers are much bigger, are just a completely different animal in terms of expense, in terms of compute power. It's dramatic how much more powerful these are technology wise than the old data centers just for cloud computing, where you just store your information on the cloud and retrieve it whenever you want. That's like child's play compared to what's happening with data centers for AI, gigawatt centers. Okay, it's all about the gigawatts, right? But I'm looking at Planet Fitness. You've heard of Planet Fitness, the very annoying gym commercials, and they pop up everywhere. $15 or so a month. It's a cheap gym. The stock, it's basically as much of a domestic story as you can think of. And it's down 31% today on a huge, huge earnings miss and a huge guide down. And then you take a look at Shake Shack, mostly domestic. Okay, I would say, compared to a McDonald's, it's very domestic. Down almost 30% today on earnings miss, cutting numbers going forward. Just a really bad quarter. And then you have McDonald's, which was up, it was actually down slightly, but they came out with pretty good numbers, raised guidance, and things are going well there. And then you contrast that to, let's bring it Starbucks, which Starbucks is off a little bit today, but they were up a lot yesterday and they had a really good earnings number. There's a difference here. Planet Fitness, Shake Shack, domestic, McDonald's, and Starbucks, big international presence. And maybe, just maybe, we're starting to see that some of these consumer discretionary companies that have a very big presence internationally, global companies, maybe that is starting to become investable again, besides just AI theme related stocks. It remains to be seen. We'll need more information. But if we start seeing more companies that are consumer oriented, discretionary type companies, I'm not talking consumer staples, I'm talking consumer discretion, right? Consumer discretion makes the things you want, consumer staples makes the things you need. And the things that we want, maybe we're starting to see the ones with a real broad international presence, especially exposure to China, are actually starting to do well because these companies have all talked about going forward with supercharged growth of all places in China. And that has been a strategy that has just talking about that has goosed these stocks. So this has been a really big dichotomy in terms of the domestic type names that are tied to the U.S. economy that are really exposed to higher gasoline prices. So consumers are hurting. They're cutting back on cheap gym memberships and cheap treats at Shake Shack, and investors see that and they want to move their money into the international type stocks, or at least the big ones with international exposure and a lot of it. So maybe it's a theme that's worth following. I'm keeping an eye on that. But as I look to broaden exposure, and look, I am very diversified and I have broad exposure to lots of companies. I'm not just all AI, and I don't just come out here and every day and bash AI. I am in these stocks, and I'm a heavy user of AI to begin with. But I want to be in stocks besides just AI related. I'd have more money if I was just focused on only owning AI theme related stocks. But diversification is a strategy that I use to help mitigate risk. Risk management is important to me, even if it doesn't help protect my account from going down in a generally down market. But I want to make sure that I am diversified, and I'm always looking at other stocks. There's value stocks, stocks with a lower P/E ratio. There are stocks with dividends. There are stocks with both. And these are what I am often looking for. I personally shun stocks that are at a year low with a low P/E ratio and a fat dividend, because I think that is a company that's actually more of a trouble than, having a problem, than it means that they're a turnaround. Okay. So why do I feel that way? If a stock has a very fat, high percentage dividend yield, I'm just keeping an eye on the time that we're live because I want to try to keep these to 10 minutes. Okay. So if a stock is paying a fat dividend yield, it probably had a lower dividend yield at one point when the stock price was higher. If the stock has a low P ratio, it's probably because the stock has gone down a lot because investors expect the earnings to go down, and the earnings could eventually go down, and then that high P ratio stock will become that low P ratio stock rather, then that low P ratio stock will become a high PE ratio stock with a dividend that's probably going to be cut. Because if you see what the dividend is, the annual stock dividend, and you compare that to what a company's earnings are, if the company's earnings aren't a good deal higher than the dividend, then you could probably spot that that company will be cutting its dividend. So now you wind up with a high dividend yield stock that's down a lot. I'm sorry, you wind up owning a low dividend yield stock that's down a lot and it has IP ratio, and it becomes nothing that you want because it turned out it was a value trap. So we are looking for stocks outside of AI. It takes a lot of guts to do that, because if you take a look at where some of the biggest losing stocks have been, it's exactly that. And I'm going to go through a quick list of stocks like some of the healthcare stocks, a lot of the discretionary stocks, a lot of the consumer staple stocks have been complete and utter disasters in the last couple of months, especially in the last year, while AI theme related stocks have been doing well. That's it for today. We'll keep an eye out on things. If anything changes, I'll let you know. I'm Mitch Goldberg, financial advisor with the wealth management firm Client First Strategy. Thank you.